Hello, good morning. Welcome to another ES Futures trading stream. Today is Wednesday, May 17th. It is 8:52 a.m. We're coming from a market from a day, I would say, I could say that this may qualify as an inside day, but could also qualify as a look below and fail, could also qualify as a spike, as a day with a spike to the downside. Very uncertain markets here. Too many things going on at the same time. You know, we have this 7 day range, 8 day range now, and the the market is in perfect balance here. You know, we have look at the lower side, two lows very close together here. Below these two lows, another three lows together here. One, two, three lows together. And one of these has no excess. No excess here means the action to the downside has not been completed yet. Gap, another non-excess low. Non-excess low, we have excess here in this day, very narrow, but it's very close to another one that is far back in time. I mean, not that, yeah, it is more than a month at least, almost 2 months. Um, and and the very wide POC, very wide POC at the center values lower. I mean, yesterday was value was lower, right? Meaning that when we have no lower overlapping to lower, meaning that if I was going to do anything here, I mean, the logical or to be in sync with the market to do what the market was doing, I would have to go short here yesterday. But the highs, man, the highs will have multiple. I believe there is still this spike here, this G period took these stops out, B, C, E, F out, but I don't think all those are out. I think still there are plenty of stops up here. The market was trying to, you can say the market was getting short, too short yesterday, but value, I mean POC, can you see what POC did? POC moved lower. It was here pretty much most of the day, but ended lower, ended a little bit lower here. Um, Based on this, at the end of the day, I can say that the market was trying to go higher, but instead of saying the trades were getting too short, but shorting the whole, uh, it was quite the opposite here, right? The market was just buying. Trades were buying. They couldn't get the market higher, right? Keep buying. At the end, there was a liquidation here, but this was based on news. I guess we have some, Speaker McCarthy have some press conference after a meeting with President Biden regarding the ceiling debt limit. And why POCs tend to attract the market? It not necessarily has to happen the same day or the very next day, but it happened. It is happening the next day here, right? This market could rally here and then come back again towards POC because there's a lot there was a lot of longs here that were taken out with the late liquidation, and as in the same way as you say that you will get the market was getting too short, you can say the market was getting too long here as well, right? Very wide POC. The most important thing to me, very wide POC, non-excess, love access here. But the short, I was short in the market yesterday, and I have a negative day. I just I couldn't do it. It didn't work yesterday. It's very hard. You have to be very patient, and wait for your opportunity. I guess I was trying to force my hand. I was trying to force my. I made like 4 or 5 trades yesterday. When I do more than three, yes, I do too much. Kind of was more than three is kind of like getting emotional, believe it or not. Uh, there are there are there are some changes in the market that are going on. Now we have this the moon the bond market has break below this level. Man, this is nothing actually. To me, this is nothing. It has a very it has high risk here. Notice also how you can draw a line here as well in the 10, and it has broke below the range, below the trend line, below the range, below support. This could be support as well. Crude oil. I mean, I'm looking at what crude can be doing here. The highs are very weak. There could be short covering here, but if this keeps going lower, uh, I think it could be related directly to the economy. We are getting summertime. Um, gold. Look at what gold is doing here. We have a huge liquidation yesterday. This market can come. Look at what happened here. Multiple lows here, another one here, more here, nothing here. It can come all the way. It can come crashing all the way down to towards the 1800. I wouldn't be surprised if that happened. Um, this if that happens, this could relieve some of the pressure from the market as well. This market actually, the yields can actually go higher. Not that I trade off gold. Okay. Now, the monthly. Look at this market. All right. The monthly, we have this tight range, multiple. There is no change in the monthly to begin with. We were talking about this like for the last couple weeks, 2, 3, 4 weeks, I don't remember. Um, Very tight range, 13 month range, 4 month range here. You can see another 2, 4, 5, 6, 8 month range here, and 2 months. This is range inside range inside range. Ooh, very tight balance. The high is the high range. You will have excess here. We don't have excess in the high. This is more range, the 2 month range. Nor the high, nor the low. And very narrow range. Narrow ranges can be toppled easily. Now I still have this reference as the 4140, which is where the market is right now, around the same level here. But there's nothing going on. After all this, after 2 months, the market has gone nowhere. The monthly, another range here, 2, 4, 6, 7 month range. I mean, 7 week range here. We are Wednesday, 3 days into the week, about to be half into the week. And notice how this bar here is inside this bar here, okay? And this one is inside this one as well. Now, the market is tightening here, it's compressing here. Now, it seems like maybe waiting for the resolution of the ceiling depth discussions. Who knows? That may have some impact here. And the longer the market stays in balance, the more dynamic, the more violent the resolution can be to the upside, to the downside. Now, is there is there any clue where this direction can be? You know, I think so. Right? This market has looked below and failed, looks below and failed, and has placed at the center of the range, right at the center, perfect inside bar, and now inside bar, inside another inside bar, inside a balance. Man, this is this balance is perfect. Markets are always looking for balance, always looking for a place where two-way trade can take place, right? But markets, once they reach balance, markets rarely stay in balance for long. The resolution of this balance can be, as I say again, I'm going to say that again, very, very dynamic. Now, the daily. Notice the first thing I noticed yesterday. I can almost place a trend line here. One, two, three, four. Very, very mechanical way to sell. Okay. Also, notice how you have a nice level there. You know, this level suppose this is tightening. This is tightening in the daily as well. We have a range. We have a small trend to the downside, but this is inside the range, right? The market is going to the downside, but it's inside your range. One, two, three, 4, 5, 6, 7, 8 days, and the market has gone nowhere. The market is in there. No, I don't want to do anything out of this. The market has done anything. Nothing has happened in the last 8 days. It's still there in the same place. We have a gap. It's in between two gaps. That could be the other observation. We have the bigger gap is in the lower side, smaller gap in the upper side. Contract when this contract is going to expire in about a month maybe. And the, these 2 days are very close to each other. 2250, 19, very close. We see that yesterday. We have these three lows here. How this market has been bought exactly from 50 here again. Not just the 50, but the same level as here. We're around the 100, around the 200, 3900 down here. Exactly. I mean, all the way down to, oh, I mean to remove this. All the way down to 3900. Very mechanical, very mechanical way to trade this one. That's what the 3900 is. And man, I guess the weakness, the weakness, the structure, uh, or the structure of the market has incredible weakness here. I mean, it is just unbelievable. You got also another thing that I can do here, or I could do here. I can put this this range, this market in a range here. It doesn't have upside extension. It's staying there. And now this could be. Can you see this? Right? This could be the stem of the P, and this is the P. Can this qualify as a short covering? Maybe. Um, the One thing that you have to remember from yesterday, if you have been or you have seen um, Jim's is in Jim's webinar is, when markets are in balance, the message that the market is giving us is it is looking for more information. It is looking more for more information before it makes its next movement, its next directional movement. Um, what that can be, and what I mean, I the thing that I can, the only thing I can think of at this moment, we got these banks that are falling one after another one. We got the ceiling debt increase, ceiling debt limit um, discussions, to increase the ceiling debt limit. I don't. I guess the last day to have that is the 1st of June. We are still we are still kind of like we still have like 2 more weeks before that date. But I think the market is going to do a lot of things until that happen, or could do a lot of things until that happen, or the very same date that there is, uh, um, you know, an agreement. What can the market do? Oh, okay. What can the market do? Look at this low here. No excess here. Three lows here. Look, there's a bunch of stops here. Bunch of stops here. Same thing goes down here. From yesterday, for yesterday we have this level that was no good. This level no good. Trade is selling from these levels. Selling from as close as the trades were selling every rally here, right? Every rally, and they finally have something. The random thing the market has. Right? There was some new event and boom, liquidation here. Liquidation and shorts. Finally, the market is breaking. Finally, we're going to 2000. Right? It is true that that value was lower. Okay, but there is you can see here there's a bunch of shorts here. Here stops here, one, two, three stops here, here, stops here. And I believe many of these ones are still in the market. Now, the market is supposed to open inside previous day range. Again, same as yesterday and same before yesterday as well. Opening inside previous day range, arbitrage short. Increases the order having a rotational market. Now, there could be a trade here. This is a look below. I say that this could qualify as a spike to the downside, but very, very short one. Though. We have this low that was finally taken, and we can call this. We may call this. Let's call this. This could be the base of the spike. This is the base of the spike here, and market opening below the spike, meaning the market is accepting lower prices. It's accepting the spike, but the market has not. The market is opening above. It will open above. And also the lower prices are being rejected, at least in the short term. And to me, it would have been very, would have been quite different if I could place this spike base down here, you know, down here, and the market would have some downside extension. That would be a different story. It would, to me, it would have been a stronger spike. But this thing looked more like liquidation yesterday. Now, another thing that is happening very quiet. very quiet. You know, the way how this is happening, its volume is increasing here. Volume is increasing one little bit at a time. One little bit at a time is increasing. Okay, we should expect something. I mean, this is, I'm just speculating here, right? Nothing. Let's see if the market can have that volume today. Okay, as I say, this is just a speculation from my part, but I'm trying to see what's what, what's happening now. These weak levels here, the selling that came from this level. Just one tick, can you see? One tick above this high. Next one tick above this high. Very, very close. Very weak selling going on yesterday. How can you go short here? All right. I was on the short side, but God, what I was trading yesterday, I was trading breakouts. It was a rotational market, but I was trading breakouts, and all the breakouts that I tried failed. I didn't have any success on that. And I closed with a loss, small loss, but loss anyway. And if the market opens up here, all of this trading will be underwater. All these trades will be underwater, especially the ones down here. Look at the amount of, oh, look at the volume here. Now, let me check. Let me put up here the histograms. All right. Again, very unusual. I mean, this is becoming the norm now. Okay. Usually, this is the last period. This is before the market close at between 4:30 and 5 p.m. It used to be like this. There could be high volume. There could be high volume. Where it is? I cannot see here. Mm-mm. High volume, for example, like 10,000, but not this kind of blocks at the closing. It's becoming almost. I mean, the nuance now would be having this kind of histograms here, right? Not like this because I'm seeing this pretty much like every day, and it looks to me. Okay, I mean, I'm going to speculate here again. It looks to me like somebody or something. It's not letting the market just not collapse, right? There's a big amount of of trading here. Now, and the question is, if somebody lets me, and the curious thing is that it's right about this level as well. It's like, you know, if somebody is going to place these blocks, we were talking about this yesterday, it could very well be like this as well. They could place ones. If somebody want to hide the position, they are going to fill their order by ones. One, 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 ones. 2,000, 3,000, 9,000 ones. A lot of ones. But if somebody let me see their position, I will question why is that? Okay. The first thing that can happen, let me get a glass of water, is if somebody see a big block there, you can see that on Bookmap. There are other. I mean, Bookmap's free, right? You can see that. The thing of swim. You can see those. You can see those trades, and what you will think if the market is going down and you see a big block there. That scares. That scares the traders, right? That scares shorts. The market is going lower, and then boom, some big volume, some big block appears. Okay, now they will just stop selling, and that's why I question this. So why somebody would put this here, this kind, is because they want me to see it. All right, why? That's the question, right? And that's happening more often than not lately. And I don't know if this is buy and sell, but just I will know just after the fact. This could be buying. I can see now this is buying, right? It was buying. Now, what do we have here from the overnight? We have two things here. Saddle is way down here. Last is way up here. You know, when you have this the breakout, this very different one from another one from the other one. This week selling here, this level would I would consider them repair if the market opens up here. Uh, and it I think that could be some, if there is some upside squeeze of these shorts, I wouldn't be surprised if there's a squeeze to the upside. Uh, but opening inside previous day range advertised shop. The exception is if the market single print. Single print is way out of the previous day range. What does that mean? Okay, we are going to open inside. Let's see the market. It is 910, comes back down to here because this is a white POC. Boom, boom, boom. It come down and opens inside this area here. That would be opening around the POC, around half back. If the market single prints its way out, boom, boom, boom. In the first, that meaning in the first period, just like here, in the first period comes out of this range, out of the range. That's the exception of the rule. Okay, no. The guideline says opening inside if the range advertised shop, the closer to the center, the higher the odds, right? The higher the odds also, the higher the rotational market. But the exception is if the market single prints its way out, meaning in the first period goes out of the range. Now, the ranges are getting narrower now. Single print its way out in this day, Monday, it will travel some really long distance, right? Market would have get long, too fast going to the upside. And the same thing going to the upside, really long distance here. Now it's getting easier. Now it's getting easier because this narrow range is shorter. A lot of things can happen. I'm not going to I have this bias to the downside. I'm trying to neutralize with market generated information. Um, but I will see. I try to be as neutral as possible and just use market generated information to to trade here. I don't have anything. I don't have anything here for me. The only thing that I could say is having a heavy weight in whatever I was thinking of is how wide the POC yesterday was. It's as wide as it gets. It can get. Can you see? All the periods there around the center of the range as well. This this is range. This is the center of them. This is the center of the 8 weeks. Uh, let me. That's the center of the big range. Yeah, that's the center of the 1, 2, 3, 4, 5, 6, 7, 8 week range. Okay, this one. Uh, I still keep it here for reference purposes only. All right. And my histograms. Oh, easy. I have it here. I put this as a background. I have this on my screen as well. Um, Notice where this has been bought, but non-excess here. This is volume here. A lot of longs here that are adding to this one. Uh, more volume here. There's a lot of volume. If the market crosses this line, there's a lot of supply here that can, liquidate, and this can take the market longer. In the upper side, we have this is when the market made a high. When the market took the when the market took the high that was made in the overnight, I believe I remember well. High volume this day, gap, big liquidation here. And the next day, the market just dries here as well. Uh, Non-excess here, no taper. That was corrected like 3 days after. Over here, there was big activity, big selling here. Selling, all this was selling, big selling here, and big selling here as well. The next days just dries. There's no volume in the upper side here. There are no shorts for if that's if I want to say the whole thing, this whole 7 day range here, all the shorts here could be squeezed to the upside. The immediate, a lot of short-term trading has to do. What I do, or what we do here is a lot of things has to be with inventories being rebalanced all the time. Market's getting too long, market's getting too short, and inventory is getting balanced. No, the more relevant things in market that for short-term trading are excess and balance. The market is balanced. We have excess in the upper side, excess here in this range as well, no excess in the lower side, and the market is in balance. And the thing is, many many of my losses have come have, have came when I tried to upfront the market. Now I saw the weakness. I know this market is terrible. Oh, this market is super strong. And this market is going to keep going higher. Oh, the market is going to break. So I am going to position myself for the break. Or I'm going to position myself for the rally. That's when I got my losses. Um, the lesson I've learned is, I would rather, and that's why that is why when you got, okay, I'd rather be in this part, right, or the trade. Okay, these are the innovators. This is a distribution curve, right? This is diffusion curve. Early adapters, early majority here, late majority in this side, and laggards down here. And when the trade is in progress, it could be in this area. Once you identify the trade, when there's a risk in the trade, it's still in this area. When everybody knows what the market is doing, everybody knows, everybody can see the market is breaking, the market is rallying. We are going to the moon, we are going to the seven hell, and you know that usually is this part here in this area. When the trade is finishing, it's coming to an end. Try to identify the trade first, you know, and has to do with a lot of weakness the market is having right now. Look at this. Why somebody would let me see the volume? Now, when I see this, is once he's seeing this kind of volume around high volume of the histogram, and having this kind of volume, for example, in areas like this. Right? Well, forget about that. Let's just now the market is getting closer and closer to the upper side of the profile. And what I am pleased to do, I don't know what I am. I was talking to my broker yesterday, and oh my, what my, what's happening here? I don't have power in my computer, my laptop. All right, 2 minutes. I was told I cannot place trades. God damn, I cannot play. If I go to, I can. And listen, I can see if I wanna go long, I will never do a future here. You know, if the most I can lose with a call, for example, the most I can lose is 5 points, right? The most. That would be my stop, for example, right? If I go long here, oh, how do I know the market is going to go higher? Where do I place my stop? This could be my stop, like 5 points. Well, I will do that, right? I could do that. But I will never let the market. No, I try to never let market uh, this option go to zero, for example, right? That's another way to manage a risk. But the thing is, I can't place anything here. That's damn. That you want? Oh, right there. Car has been fixed. Woohoo! Yeah. Okay, that's good. It has been repaired. Okay. Now, what I was trying to get these options yesterday, right? When the market was, well, I guess around 9, I went to bed early yesterday around 9 p.m. What is 9 p.m.? 9 p.m. K here, in this area here, around this area, because I see the potential. You know, what I saw is I saw white market, white POC, and very weak levels in the upper side. That trade has been completed. You know, this one, on what the trade was aimed to. The trade was aimed to take this, this. The trade was aimed to take these levels out. This has been. This is history. This one is history as well. There are still some. I don't know why I put this line here. There has to be something. Why I put this weak level here? Oh, because of this. I consider this level because I still think there are some stops from this 1, 2, 3, 4 levels here. Right? Now value is higher, at least now. Overnight inventory is mostly long, is it? Look at Seller. Seller's way down here. Overnight inventory is long. The counteraction to overnight inventory, to overnight long inventory, is a break. The past 2 days we were having counteractions to overnight inventory. 60-70% of the times there is a counteraction to overnight inventory. For 135, for 135, what's the 5 here? Where's volume? Volume, same as yesterday. It's increasing as well. Now let's check how this. I didn't see how this. Weak levels coming from last. Third was taking. Mike is attempting to do now. Look where this. Okay. Not that I trade. Not that I used to trade. The market has re-entered this value area here. Value is higher now. Okay. Value is higher. The shorts from this day, from these periods that we have, the ones that I just erased, are fighting back there. And the trade has been completed. What was the trade for me? Taking these highs, taking this one, taking these highs out. Has been completed. If there is upside extension, that's extra. That was a trade from yesterday. I mean, from 2 days, right? Now we are inside the range. We are range inside. One range inside another. Look at this volume here, but this is Orlando's histogram here. This thing has been repaired. Now, what the market is going to deal with first? This one or this one from yesterday? And this area here represents a lot of volume from the previous, from the period previous to the closing of the day. Not of the session, but the day. Which is, in this case, is the last. Very uncertain markets. No? And can you see how you can trade these trades, these counter trades, in this case to the upside, have a fundament. I mean, that's what I think, right? I'm not going to go long just because the market has go lower too much. It is time the market rallies. Right? That's not a reason, to me at least. I need to see something else there. So now, what I'm going to, if I'm going to be short here, why I'll be short? Why I'm going to be short? I'm doing some taping here in my desk. I'm sorry for the noise if this is annoying. I'm taping my mouse pad to to my desk. I'm telling you, this thing keeps moving around. Okay, almost done. One more. I'm sorry. My apologies for the noise. I know it can be annoying sometimes. Okay, it is in place now. Yeah. Look at what. Look, look, what's happening here? No, what can I say of this market? There's nothing clear in this market. There's not clear selling. There's no clear buying. There could be a counter action. If I am playing the counter action to the overnight long inventory, I will place I got my put, right? Got my put, but my stop is the opening, you know, two, 3 ticks before the high. But notice where this market has been selling from. It's kind of 2 ticks from 1 tick from overnight high. That's not a good high if I want to be a short. It's a weak lever to place anything there. It could be. I am for me. I am not that kind of trader. Okay, but why it's very important to have and the first thing to have is market understanding, and the other thing that goes hand to hand is self understanding. You know, what kind of trader are you? I'm not that kind of trader, but there are traders that use, for example, are going to use this high, you know, as 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 entry. The market is going higher, boom, I go short from here. Yeah, I go short. And what my stop is just 1 tick above, and that's it. Normal. You don't fall in love with that trade. It works right away, or it doesn't work. Lately, in this market, the market we are having at this in the last couple months, have noticed that favor those kind of trades. And that the thing is that's another thing, right? That's when you think you have figured out the market. If you are that kind of trader, oh, say, oh my God, I figured out the market. Finally, I know how to trade. Um, but that's just a way of trading. It was one way. But the market keeps changing. The market keeps evolving all the time. There are not 2 days that are the same. And just when you get used to do something, the market, the market change. And there's another thing that start happening. It's just not happening, man. Seems like we are going to have lower volume today. Notice, notice for example, if you remember, just I hope you remember this. Notice the way how this market is doing this. You have no attempt whatsoever to continue the direction of the overnight trade. Compare this day to this day. How the selling happened this day. How you remember this day? And how the selling is happening here. Notice the difference, the conviction the market had here versus what is happening here. This might be a developed trade here going on. And what the trade, man, I don't have it. Oh, I'm trying to, what I'm doing is I'm trying to find a trade here. I'm looking for a trade. Usually when you look, oh boy, when you look for a trade, you will find a trade. And usually it's not going to be a good one. Gold is falling. Also, it's right at that level around the very wide POC tend to attract the market. Okay, like it's not unusual the market comes back a couple times towards wide POCs. This option, the 41.35, which is POC, has moved only like 75 cents. Man, it was 7 when the market was up here. Can you see? Man, this is uh, yeah, it has moved like 6 point here, but only on the risk here. Right? Okay, that part of it. 41. And if I'm going to hedge that, what I would do is I would use maybe 20 here. Why it is? Because it's a weak level here. But remember, the other possibility here is this market has looked below and what the destination of that trade is when it fails, when the breakout fails. The first sign is the spike, the market opened way above the spike. The destination of this trade can be the opposite side of the range. It hasn't reached the opposite side. Not of this one, but of this range here. But can you see when we talk about these things, we are talking about different time frames. This trade here, this trade towards POC is one trade in a very short time frame. This other trade is a bigger time frame, kind of like a daily, right? Or it can be short time frame also, but a little bit bigger, a little bit bigger. Mark is doing the same thing that I did yesterday. It has a lot of shorts. Yesterday has a lot of shorts. I have this level highlighted. I don't know why. I don't remember why I highlighted this 3650. Truly, I don't know. What is there? It come out to be POC. This low, nah. This is over now. But I don't know. I don't know why I put this on here. I am looking. This could be something interesting. The direction. I mean, the trade. This trade could be aimed towards this the 4130, which is the area where that big blocks before the end of the day are closed. To me, opening inside previous day range are you know have or come with a cautionary. with a with a warning flag, right? With a yellow warning, so be careful. That's what I have on those days, on those kind of openings, which is which is the one we are having now. If you have any question, please just let me know. It is really nice to hear other people's opinion. There's nothing wrong. There's nothing wrong right here. We have to be very flexible. We need to have an open mind and be ready to adapt. Market has reached POC. Come on, man. Volume could be the same as high as yesterday. High volume here we have. Oh, I use this proxy. This is two tick chart. I use this proxy. It has high volume here. The only day, oh, look at that. The only day when I saw this kind of volume on the one tick chart was here on that day. All right. Now everybody knows the market is going lower, right? Everybody knows the market is going lower now. This could attract momentum to the downside. The potential destination this trade, if this market comes all the way down to here in this period, that would be so. It's just too much too far, too fast. Notice where this has stopped, very close to halfback. When I halfback here. All right. Boy, this market is getting too short here. It has a lot. It has a lot of inventory here on the overnight. Right? It has a lot of inventory from the overnight. It's going to reach this area. It is in this area already. The area where it has high volume last night at the closing. And still Still, I couldn't have, with all this movement that happened right now, I couldn't have hedged that position. The 41.35, 41.35 is 11 now, but the 41.20 is about to be 5. Still needs 2 more points to be at least 7. And that is would be just to remove the risk, to take some risk, to put those puts on zero risk. Now, and aiming in the market closes below 41.20 today, that would be 15 points. But still, after all this movement, it didn't get that yet. Now, these ones are 470, and the original 41.35 are 11. Still an inside there. Notice how it was closed. Remember the session, the rule, the market opening inside previous day range, advertised short, and the exception of the rule would be the market getting out of the range in the first period. It was closer to this. It was closer to that, but that would be you know, ignoring or accepting the direction of the overnight. Right? There was a lot of shorts here that were. I was looking maybe to some squeeze to the upside. It didn't happen. The first thing the market is doing is dealing with the overnight inventory, the overnight long inventory. But let's see if the market takes this low out in the first period. That would be a you know, long distance to travel. It seems long, right? But if you take in consideration the risk that there is here, how the market was being bought here, twice here, 3 times here, non-access here, it doesn't seem that far actually, right? Now, the next thing to have here to be careful is that we were talking about how the last couple days, 2, 3 days, all 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 that we had was uh, counteraction to overnight inventory. This day, this day, this day. Now my overnight inventory was short, and there was a short squeeze. Overnight inventory was long, there was long liquidation, and so on. Right now, is today going to be the same thing? Right? If it's the same thing, selling selling will stop. Will stop. The market will go higher. And traders remember, traders do what works until it doesn't work anymore. Just when you think you have figured out the market comes, okay, you know what? Screw you. Traders do what works until it doesn't work anymore. Volume, come on, volume. Look at the volume. This is the first sign that this could be just a long liquidation. The volume. We have only like 3 more minutes to go. The volume is going to be a little bit lower than yesterday. But remember, that's only one piece of information. Okay. In This kind of markets, you gotta win. I mean, don't overstay your welcome, right? Have have you trade. Once you have a trade, you know why you enter a trade. You know where the location is, and have a destination trade as well, and learn how to monitor your trade. My destination. What is my destination? POC, for example, right? POC. Okay, it took POC. Okay, I'm out. It's having conviction coming to the downside. Okay, I keep it. Oh, I've moved my stop lower or something. Why move my stop to POC? That was my original trade. Move my stop to POC. Or if I have an option, you have an option here. If I have an option here, as soon as the market comes back to POC, I'm out. Well, or not that, but if I see, what's going on here, right? What's going on here? I start monitor for continuation. The market, if this was my original trade, the market can break all the way down to here. But this was my trade. No regrets, right? You trade work. For the one time, for the one time you catch all the movement, there will be 9, 10 times that you want. The market will reverse on you, and you have. I mean, that's what happened to me, right? For the one time I catch a movement, 9, 10 times the market comes back to my original destination trade, and not just that, just reverse on me and ended the day with a loss. Now, the question is there any coincidence that there's a lot of trade around these late night big volume blocks? The market has come to a spike, to the base of the spike here. This is the spike. Acceptance, we see the market building value inside the spike or below the spike. Now value is overlapping to lower. He's using this level as a reference. Almost all of the overnight inventory has been removed now. What happened with this thing here? 7% lower, maybe? It's not 7% lower? Yep, 7.45% lower than yesterday. This is a cautionary, you know. When you have this lower volume, just be cautious, Be cautious. This could be just a long liquidation here. Be careful. Don't expect too much. Like hedge, move your stops, take profits, trim your positions, whatever. This low is not good here. You don't have a good low here. The market may have got too short because this is a long distance of travel. Market has got too short. I may need to remove some shorts if there's going to be anything to the downside. Very nice trade here. Right? No attempt to continuation up here. You stop. The market give you a good opportunity here. Your stop it could be the high here, a couple ticks from opening, and it gives some nice downside. But I believe that try to be as neutral. But the most important thing to me here is the value was higher at the beginning. It's too early to see, right? Now value is lower. Yesterday was lower. Now value is overlapping to lower as well. Now what could happen here? Can value be lower? Overlapping to lower is going to be inside value, overlapping value, or overlapping to high. To be or to have an overlapping just to have overlapping value, this market will need to rally just to have overlapping. The same distance the market broke was a break here. Uh-huh. Now look at this, okay? Look how risky, what the risk of this market. This low has no excess. Yeah? We have no excess. If we combine these two together, there's no excess here. We have no excess here. We have three lows here. That's one side. Now the high is coming from last. It gives me an idea that this is not strong selling. This is just, the selling the activity that we were having from the previous days or weeks. No, we're just trading money here. Mm. What do that mean? Now, if you got a win, don't overstay your welcome. Take your profits, hedge your positions, or do something. Yeah. This business can be very emotional, right? Greed can come. Okay, I'm going to have it. The market has. I have 10 points now. I can have another 10, right? And you see if you have your trade somewhere up here. Put a stop around this opening because of the overnight inventory, the rejection of the spike, whatever, YPOC value. Um, and then you don't take profits. You take here, you put your stop here. The next thing you move stop lower. But now, man, Maybe it's going to come here and then it's going to come down. All those things start to we start seeing all those things. Right? We got that, and that's why it's important to have a trade, an entry, and an exit plan before getting into the trade. So what do I see? I see weakness in the market. Okay, weakness. What value is? Value is lower. YPOC. Okay, this could be a market to the downside. All right, this could be a market to the downside. Value. The odds favor the downside. Now look at where the market has been sold from. Halfback. You know, to the tick. Who sells from those levels? You know, weakness in the upper side, weakness in the lower side. What do I do here? You got your trade, okay? Take your profits and wait for the next one. Hmm. Taking, repairing this high, taking this high out, which is exactly a hard back, puts the market close to yesterday's hard back, close to POC. This POC could very well be up here as well. Okay, this market can come all the way up to here, and coming all the way up to here could gain momentum. No, remember there are still. I consider this high is not that good. There's still a bunch of stops in this area from this. Just imagine what happened. Just imagine the shorts. Just imagine this. Okay. Just imagine you are short yesterday. Short, short. You are short. Bam, you are short the market, and the market opened way up here. Gosh, what happened? Okay. I just want you are well underwater. I just want this market to come lower, and I'm going to close my position with as little a little loss as possible, or even a small gain. So as soon as the market gives you the opportunity, you close your position. You are short. God damn it, I buy, right? And that could be something. That's something that can happen as well. You have to consider those things. All those shorts are out. Mhm. And what happened when the shorts cover the buy? They could give us this movement to the upside as well. Right? This one could be shorts covering this part. They were not they were not squeezed here, but they could be covering here. A squeeze favors the upside, a cover, short cover can favor the downside. But I see short-term trading here. Very, very short-term trading here. All right, I'm going to get another glass of water. It is 10. Something that I have noticed also. This is what always take notes, right? And when you start taking notes, you will see how the market changes. This market has been given opportunities uh, at the opening more often than before. Usually opens, I don't know. I mean, that's definitely a high risk to trade at the opening because there's a lot of things going on at the opening. Um, but it wasn't the case the last, I would say, the last couple of weeks. It wasn't the case today. Okay, it is 10:15. Unless there's any question, guess I'm going to call it. I'm going to call the morning. I wish you guys a really good rest of the day. Stay safe out there. Be careful. Hope I can see you at noon. Bye bye.